In times of economic uncertainty, investors often ask the same question: where is the safest place to put your money? Traditionally, gold has been seen as a reliable store of value, a hedge against inflation, and a safe haven during financial crises. But in recent years, a new player has entered the conversation: Bitcoin. Could cryptocurrency, particularly Bitcoin, become the modern equivalent of gold? Today we'll explore what history, economics, and market trends reveal about gold, crypto, and their roles in uncertain times. Gold has a long and storied history. For thousands of years, civilizations have valued gold for its scarcity, durability, and beauty. Even today, central banks around the world hold significant gold reserves as a form of security against economic instability. But why is gold considered a safe haven? One reason is its intrinsic value. Unlike paper money, which can be printed in unlimited quantities, gold is limited. Its scarcity gives it a form of built-in protection against inflation. During periods of financial turmoil, when currencies may lose purchasing power, gold tends to retain or even increase its value. Historically, gold prices have risen during economic crises. For example, during the 2008 global financial crisis, gold surged as investors sought refuge from falling stock markets and declining confidence in financial institutions. Even today, geopolitical tensions, inflation fears, or unexpected crises often push investors toward gold. Now let's shift focus to cryptocurrency. Bitcoin, created in 2009 by an anonymous developer or group known as Satoshi Nakamoto, introduced a decentralized digital form of money that operates independently of governments and central banks. Bitcoin is limited by design, with a maximum supply of 21 million coins. This scarcity is often compared to gold, leading some to call Bitcoin digital gold. Unlike traditional currencies, Bitcoin cannot be printed at will. Its decentralized nature means it is not tied to any specific economy, which can make it appealing during times when fiat currencies are under pressure. But what about its volatility? While gold has remained relatively stable over decades, Bitcoin's price can fluctuate dramatically in days or even hours. This volatility presents both opportunities and risks for investors seeking a safe haven. So how do gold and Bitcoin compare as safe havens? Stability: gold has centuries of proven stability, while Bitcoin's history is just over a decade. Investors seeking long-term security often favor gold. Accessibility: Bitcoin can be bought and transferred digitally anywhere in the world, making it more accessible than physical gold in some situations. Inflation. Hedge: both gold and Bitcoin are considered hedges against inflation. But Bitcoin's short history means we have limited data on how it performs across different economic cycles. Liquidity. Gold markets are highly liquid with established trading systems. Bitcoin markets are growing rapidly, but liquidity can vary depending on exchanges and market conditions. Investors are increasingly diversifying between the two, holding both traditional and digital assets to balance stability and growth potential. Despite its potential, Bitcoin is not without risks. Its extreme price volatility can lead to substantial short-term losses. Regulatory uncertainty is another factor. Governments may impose restrictions or taxes that impact the market. Additionally, digital assets are susceptible to cybersecurity threats, including hacks and scams. Gold, while stable, is not entirely risk-free either. Storage costs, market manipulation, and geopolitical issues can impact its price. And while gold tends to preserve value during crises, it rarely generates rapid growth compared to riskier assets like stocks or crypto. Many financial advisors now recommend a diversified approach. Gold can serve as the bedrock of a safe haven strategy, while Bitcoin provides an opportunity for higher returns and digital exposure. By holding both, investors may reduce overall risk while taking advantage of new opportunities in the evolving financial landscape. Interestingly, institutional investors are starting to recognize Bitcoin as a potential hedge. Major companies, investment funds, and even some central banks are exploring digital currencies and blockchain technology. This growing adoption is changing the perception of crypto from a speculative asset to a more legitimate store of value. In conclusion, both gold and Bitcoin have unique roles in uncertain times. Gold offers stability, a long historical track record, and a proven hedge against crises. Bitcoin offers digital accessibility, scarcity, and the potential for growth, albeit with higher volatility. Whether Bitcoin will ultimately replace gold as the new safe haven remains uncertain, but for now, combining both assets may offer a balanced strategy for navigating economic uncertainty. Invest wisely, understand the risks, and remember, in an unpredictable world, knowledge is your most valuable asset.